Hello dear friends. Welcome back to another episode of Wisdom Wise, in-depth analysis of Japan's bold move and its ripple effects on the global economy. Today, we explore how Japan's recent financial decisions have sent shockwaves through the US dollar and what this means for economies around the world. Japan, a nation known for its economic resilience and technological advancements, has recently made a strategic economic shift that has caught the attention of global financial markets. This move, driven by a combination of domestic economic pressures and strategic international positioning, has led to significant fluctuations in the value of the US dollar. We'll delve into the specifics of Japan's actions, the immediate reaction of the US dollar, and the broader implications for global trade, investment, and economic stability. Stay tuned as we unpack this complex and fascinating topic, one scene at a time. To understand the significance of Japan's recent actions, we first need to examine the current state of Japan's economy. Over the past few decades, Japan has faced numerous economic challenges, including deflation, an aging population, and sluggish economic growth. Despite these hurdles, Japan remains the world's third-largest economy, with a robust manufacturing sector and a strong presence in international trade. In recent years, Japan has implemented various monetary policies to stimulate growth, including quantitative easing and negative interest rates. These measures have aimed to boost consumer spending, increase investment, and maintain stable inflation rates. However, these policies have also led to a complex interplay with global financial markets, particularly the US dollar. Japan's strategic economic shift can be seen as a response to both domestic challenges and global economic trends. By making this bold move, Japan aims to position itself more favorably in the international arena, potentially reshaping global economic dynamics. What exactly is Japan's bold move, and why has it garnered so much attention? Recently, Japan announced a significant change in its monetary policy, shifting away from its long-standing approach of aggressive quantitative easing and negative interest rates. Instead, Japan is now focusing on a more balanced and sustainable economic strategy. This policy shift involves tightening monetary policy, reducing asset purchases, and allowing interest rates to gradually rise. The goal is to stabilize the economy, control inflation, and strengthen the yen. This move is seen as a signal to global markets that Japan is confident in its economic recovery and is ready to take on a more proactive role in the global financial system. The announcement immediately impacted the value of the US dollar, causing it to weaken against the yen. Investors and traders reacted swiftly, leading to increased volatility in currency markets and prompting a reassessment of global economic forecasts. The immediate reaction to Japan's policy shift was a noticeable depreciation of the US dollar against the Japanese yen. The currency markets, always sensitive to changes in economic policy, responded with heightened volatility. This shift has significant implications for the US economy and global trade dynamics. A weaker US dollar affects various aspects of the economy. For exporters, a weaker dollar can be beneficial as it makes American goods cheaper and more competitive in international markets. However, for importers, it means higher costs for foreign goods, which can lead to inflationary pressures. Investors also closely monitor these currency fluctuations, as they impact the value of dollar-denominated assets and investment portfolios. The sudden change in the dollar's value can lead to shifts in investment strategies, influencing global capital flows and market stability. Japan's bold move and the resulting impact on the US dollar have far-reaching implications for global trade. The interconnected nature of the world economy means that changes in one major currency can ripple through international markets, affecting trade balances, pricing, and economic stability. For countries that heavily trade with the US, a weaker dollar can lead to shifts in trade dynamics. Exporters to the US may find their goods less competitive, while American exporters benefit from increased demand. This can lead to changes in trade balances, influencing economic policies and negotiations. Furthermore, multinational corporations operating across different currencies must navigate the complexities of currency exchange rates, which can affect their profitability and strategic decisions. The global supply chain, already strained by various factors, faces additional challenges as currency fluctuations impact costs and pricing. The impact of Japan's monetary policy shift extends beyond trade and directly influences global investment and financial markets. Investors worldwide are closely watching these developments, as changes in currency values affect asset prices, investment returns, and market stability. Currency fluctuations can lead to shifts in investment strategies, with investors seeking safer or higher-yielding assets. A weaker US dollar often drives investors towards commodities like gold and oil, as well as emerging markets that may offer better returns. Additionally, the bond markets react to changes in interest rates and currency values. As Japan tightens its monetary policy, global bond yields may adjust, influencing borrowing costs and investment decisions. Central banks around the world also take note, as changes in Japan's policies can signal broader economic trends and potential shifts in global monetary strategies. While Japan's bold move has significant global implications, it also has profound effects on its domestic economy. By shifting towards a more sustainable monetary policy, Japan aims to address long-standing economic challenges and position itself for future growth. Tighter monetary policy can lead to higher interest rates, which may initially slow down borrowing and spending. However, it also helps control inflation and stabilize the currency, which can benefit the economy in the long run. A stronger yen can reduce import costs, benefiting consumers and businesses that rely on foreign goods. Moreover, Japan's move signals confidence in its economic recovery and resilience. By taking proactive steps to stabilize its economy, Japan aims to attract investment, foster innovation, and maintain its position as a global economic leader. Japan's strategic economic shift has not gone unnoticed by other major economies. Central banks and financial policy makers around the world are closely monitoring the situation, assessing the potential impacts on their own economies and financial markets. For instance, the Federal Reserve in the US may need to reassess its monetary policy in response to changes in the dollar's value and global economic trends. Similarly, the European Central Bank and other major central banks may adjust their strategies to mitigate the effects of currency fluctuations and maintain economic stability. Emerging economies, which often face higher volatility in response to global financial changes, are also impacted. These countries must navigate the challenges posed by shifting trade dynamics, investment flows, and currency values, all influenced by Japan's bold move. Japan's decision to shift its monetary policy is not just a reaction to immediate economic pressures but also a strategic move to influence long-term economic trends. By stabilizing its economy and currency, Japan aims to foster sustainable growth and resilience in the face of global economic uncertainties. This move may signal a broader trend among major economies towards more balanced and sustainable economic strategies. As countries navigate the complexities of globalization, technological advancements, and demographic changes, the need for robust and adaptable economic policies becomes increasingly apparent. Japan's actions may inspire other countries to reconsider their monetary and fiscal policies, leading to a more coordinated approach to global economic stability. The interplay between major economies will shape the future of international trade, investment, and economic growth. As we conclude our analysis of Japan's bold move and its impact on the US dollar and global economy, it's clear that we are witnessing a pivotal moment in international finance. Japan's strategic shift has not only influenced currency markets but has also prompted a re-evaluation of global economic strategies. The immediate and long-term effects of this move will continue to unfold, shaping trade dynamics, investment flows, and economic policies worldwide. As investors, policymakers, and businesses adapt to these changes, the global economy will enter a new phase of development and cooperation. Stay tuned to our channel for ongoing updates and insights into the evolving landscape of global finance. Thank you for joining us in this deep dive into Japan's bold move and its far-reaching implications. Remember to like, share, and subscribe for more in-depth analyses of critical economic events.